Okay, welcome everyone. Welcome to our eighth. This is our eighth meeting of the Michigan Investor Group. We even have a fancy sign up here tonight. We're getting more and more legit. Thank you very much for coming. And so tonight we're going to learn a little bit about investing in precious metals safely. So the safely part of it is going to be one of our interesting little, tidbits tonight. So our agenda. I think everybody here knows the place, but the restroom is down by the front entrance where you came in by the water cooler, in case you need to use that. Overview of our future events. December 4th, we're going to try to sneak in one more meeting before winter and all that stuff happens. So December 4th, we're going to have a night that's going to be about single-family turnkey house rentals. So basically, there's a group that buys, rehabs, finds a tenant, and then sells to investors, intended to be a relatively passive way of investing in single-family house rentals. One of our members, Carlos Briseño, has quite a bit of experience in that, and the group he's been working with out of Indiana is going to come present December 4th. And then later on in 2020, we're going to be having some presentations from, remember ProManus? They were our second presenter. I call them, they were kind of like maybe a white collar, high-end real estate private equity group. We're going to have a blue collar, more scrappy real estate private equity group. Guys that are buying like they just bought a retail complex in Chesterfield Township, Michigan. They bought some industrial buildings in the Upper Peninsula. Not quite as, maybe, a little bit more blue collar level. And then we're also going to have private equity group that buys small operating businesses is going to be presenting. And then that's what we have planned for the start of 2020. I think we're going to take off January and February and kick it off in March. So tonight we have the pleasure of getting to know a little bit about Mr. Patrick Heller. I was introduced to Patrick by Phil Sponsler, who knows him through a leadership network in the Lansing region. And I want to give credit to somebody else. Tim Puffer actually asked maybe 3 or 4 months ago, hey, how about we have a MIG meeting about gold and silver and metals, and it's not anything that I know very much about. So I think I mentioned it to Phil, and then Phil said, here's our guy. So we're very happy. Our speaker tonight, Patrick Heller, from the Liberty Coin Service, was born right here in Jackson, Michigan, which might be interesting to learn more about. But he grew up in many different places, including Michigan, Wisconsin, and Africa.
Sudan, my country.
Wow. How about that? Sudan and Liberia. After working as a CPA in Oakland County, Patrick purchased and owned Liberty Coin Service for 33 years. He calls himself semi-retired, and he's serving as Liberty Coin Service's communications officer. Over the years, he has earned honors from several associations that all have the word numismatic in them. What is numismatics? Well, from what I found, numismatics is the study and or collection of currency, coins, metals, and related objects. That sounds like a very relevant topic for us tonight. In the late 90s, Patrick led an effort that helped Michigan, the state of Michigan, enact a rare coins and precious metals tax exemption, and later documented that our state treasury collected greater taxes as a result. Someone's missing here tonight, but reduced taxes and increased state revenue, that sounds like something my father needs to hear about. Since then, since working on the Michigan initiative, Patrick has helped 12 more states with similar initiatives and exemptions, including this year, Kansas and West Virginia. Pat writes extensively, including Liberty's Outlook, including the monthly Liberty's Outlook, which is published by Liberty Coin Service, and a weekly column for numismaticnews.net. And he's also been on several local radio stations, and interviewed and quoted and written by in many publications, including the Wall Street Journal, Forbes, and many other newspapers. Wow, pretty impressive. So please join me in welcoming Pat to MIG as he brings his presentation.
Thank you, David. The program I developed, Consumer Protections in Buying and Selling Physical Precious Metals, came out of something I noticed that a lot of people would do research on their own and come to the decision that I should own some precious metals, gold and silver especially. What do I do now? And that information is a little harder to find. So this program goes into the nuts and bolts of, if you say you want to buy some physical precious metals and own some, then what do you do? But that isn't necessarily where you are tonight. So I'm going to take just a couple minutes of saying, what is the rationale for wanting to own some physical precious metals? You can go back thousands of years. In gold, you can go all the way back 6,000 years and finding that being used as a medium of exchange. Silver goes back 4,000 years. The original coins that were made around in the 6th century BC in the part of the Greek world that is now in Turkey were made of gold or silver. Or actually, one of the native alloys that are made out of is called electrum, which is mostly gold but has significant silver content. Nobody knows exactly how the concept of money was developed, but the best theory I like is it was used to pay for mercenary soldiers that would travel from their lands to somewhere else and fight for another ruler as a means that they could be paid and basically be able to spend it anywhere they went, if they went back home or they went somewhere else to serve as a soldier. It was just practical. But over history, the silver and gold coins traded because of the value of the metal content, not because some government said it's $1, a peso, a franc, a dram, a denarius, or whatever. Those governments could fail, and it didn't matter. If you had those coins, you had the value. And that's the purpose to consider owning some portion of what you consider your net worth or your investment portfolio in the form of precious metals. I call it owning wealth insurance. When the prices of paper assets like stocks, bonds, and currencies are falling, you tend to see the prices of precious metals rising as calculated in currencies. And of course, if the paper assets are doing strong, the precious metals on average tend not to be doing so well. But that's where you have most of your investments tied up, so you're getting good results with most of it. A couple of examples of how precious metals can help sustain you is last decade there was an event called the Great Recession. During that period, overall, you had a substantial increase in gold and silver prices, even as stocks and bonds were not doing that well and currencies got weak. If you go back to the previous decade, there was the Far East Asian currency crisis. And the country of Indonesia suffered the worst. Those in that country who had their wealth tied up in the Indonesia rupiah basically were destitute. The people who happened to own some physical gold and silver either didn't suffer as much, or in some cases your standard of living didn't go down at all. So another concept behind owning physical precious metals, beside is a counter-cyclical balance to other kinds of investments, is as protection against if the currencies fail. And you do have some investment people such as Steve Forbes who's editor-in-chief of Forbes magazine, commodity guru Jim Rogers, or a Canadian investor, Eric Sprott, who was just inducted into the Canadian Investor Hall of Fame, predict that the US dollar is either at high risk of failure, or in the case of Rogers and Sprott, they flat out expect it to collapse within a decade. So you can do lots of research on the subject, but once you get to the point you're saying, I should have a little bit of physical precious metals, so let's get going with the presentation here. This program I developed at the request of an investment advisor named Mark Skousen. He speaks at a lot of conferences, and he asked me to develop this program, and I've delivered it around the country. So the first question is, who would benefit from this program? People that have done their research and made the decision they want to own some precious metals and want to know what to do next. But even if you have already started purchasing some, it wouldn't hurt to get some more ideas on good directions to go, and also advice on how to find businesses that would be good to deal with. There are alternative precious metals investments. I'm not going to cover these. I'm not necessarily an expert on the nuts and bolts of all these. One example is mining company stocks. There are companies that mine gold. There's companies that mine silver. The largest silver producing mine in the world is a copper mine in Poland, and silver is just a byproduct of their production. I have a brother-in-law who's in management at the Red Dog mine north of the Arctic Circle in Alaska. That's the largest zinc mine in the world, but it's the second largest producer of silver in the United States, just as a byproduct. But mining companies can do well if the prices of precious metals go up, and maybe their profits are trimmed when they go down. But there's a bunch of other factors that can affect, for better or worse, having nothing to do with the prices of precious metals. You do have it happen sometimes around the world where countries will nationalize the mines and confiscate them. A positive factor could be a new strike that extends the potential profitability of the company. You can get environmental factors. 10 years ago, from discovering a site that had a rich enough potential ore to develop into a mine, it took about 3 years. But the latest I've heard is that nowadays it takes at least 10 years to develop a mine. And if it takes 10 years to develop a mine, the risk factors go up of something becoming an obstacle. The increase tends to be for environmental or political reasons. It also costs more to finance the development, which reduces the profitability. You can get exchange-traded funds, which is you own a share of a fund that theoretically owns physical precious metals, but if you read the prospectus in detail, they have custodians of the metal and sub-custodians, and there is not necessarily a thorough vetting that they really do own the physical metal that they theoretically own. You can take delivery, in theory, from many of these funds by turning in your shares, but in the case of silver, I think the standard is you need to turn in shares representing 50,000 ounces of silver. So that today would be close to $200,000 worth. In the case of gold, it's comparable. It's like $250,000 worth of shares in gold. So for the average person, that's not something you can afford. But they also, in a lot of cases, are taxed as master limited partnerships, and you can actually generate income that you have to pay income taxes on each year, even if you never bought or sold in that year. So there's, there's some risk the assets aren't there, and you have some potential tax consequences. To try to make it convenient for people, companies work with the British Royal Mint, the Royal Canadian Mint, and the Perth Mint in Australia to have physical metals sitting on the floor that you can purchase ownership. Say if the Perth Mint has a 1,000-ounce silver bar on the floor, you might buy that bar, or you might buy 10 ounces worth of it. You don't have ownership of any specific bar, but you have some ownership there. If you want to have it fabricated into a product to take physical delivery of it, there are some extra charges for that. And back in 2008, when there was a tremendous demand for people wanting to get their hands on physical precious metals, I think the Perth Mint got about 6 months behind on fulfilling demands to fabricate product and deliver it. But these are all government owned, and I'm not completely trusting of governments holding precious metals that I theoretically own. These operations all have good reputations. I've met a number of the people involved with the operations over time, but that still doesn't, it's not as safe as if you have your mitts on the stuff yourself. There's also commodity contracts and options contracts. Those are buying or selling a contract for future delivery, which for most instances the investors are investing in the price. They don't have the intention to try to actually take delivery of the physical metal, although you could. But in order to avoid getting to the point of getting physical delivery, you just sell your position before it matures. And there's also a developing market of so-called bank accounts denominated in precious metals. In the United States, a complication of that is every time you write a check on such an account and a little bit of your precious metals are disposed of, that's considered to be a sale, which you got to put on your tax return, whether you had a gain or a loss each time you had a transaction there. Some of these could be suitable for short periods of time, but what I really recommend is you have physical metals either in your direct custody or you have it stored in vault storage in your name, not in a custodial account where the metals are owned by the storage facility and therefore subject to third-party claims against that entity as opposed to being in your name particularly. I have copies of this presentation that you can all take with you, so I'm going to go kind of fast through this, if you could. And if you want to get copies that are larger, you can always send an email to me, and I can send you a PowerPoint presentation or a PDF of this presentation in full size. When you hear a reference to the spot price, that's a futures contract that has a maturity of this month, meaning on the spot. But when you hear that price, That may be the price of the metal that's being traded, but when you buy a commodities contract, you have broker's commissions, you have storage charges, you have insurance, and there may be taxes due. So if, say, the price of gold is $1,500 and you want to buy a 100-ounce gold bar in the New York Comics contract, you will pay more than the $1,500 per ounce to actually buy that 100-ounce bar. Comics contract for silver is for 5,000 ounces. If you're in the London market, the gold contract is for a 400-ounce bar, or silver is, again, a 5,000-ounce contract there. If you buy a contract on the Shanghai Gold Exchange, 94% of theirs are for immediate delivery of the metal, and the sellers cannot offer gold or silver for sale there until after the exchange has received custody of the physical metal. So those contracts can be fulfilled immediately with the metal. Same way, buyers cannot offer to buy unless the exchange already has the cash there. But in Shanghai, the contracts are for a kilogram size gold bar, about 32.15 ounces. There's bids and ask prices. The same way with stocks is you can look on the exchange and saying there's a bid price and an ask price. So you have a little bit of a spread there. Troy ounce is how one of the two ways that precious metals are traded. In the United States, it's mostly in troy ounces, which are about 10% heavier than the avoirdupois ounces that people and bananas are weighed in. In the Far East, and it's mixed in the rest of the world, metric weights
So
are
let's say a
taken.
1 ounce coin right now,
Yes,
I'm buying a 1 ounce coin, am I buying a troy ounce?
that's correct.
Okay.
Sometimes some national marketing companies try to get a little bit sneaky about that, but in the precious metals trade, you're talking troy ounces or you're talking grams.
When they're quoting spot price, they're quoting a troy ounce?
Yes. Another element to that is if you talk about, for instance, the United States Gold American Eagle 1 ounce, it's an alloyed coin, so it actually weighs more than a troy ounce, but the gold content is 1 ounce. Melt value refers to the intrinsic metal value, so you take the spot price of gold, you multiply it by the amount of metal you have, because not all products have exactly 1 ounce or 1 gram of weight. And then premium refers to how much do you actually pay to obtain a product compared to the intrinsic value of the metal. For instance, if you're buying a gold American Eagle and the gold price is $1,000 or $1,500, and I see at 2 o'clock this afternoon our company was selling 10-piece lots of them at $1,545, so that works out at you're paying 3% above the gold value to buy it in that form. So there's perhaps more choices than people realize when we have a number of people saying, oh, I'd like to buy some gold. I say, we can help you with that, but there's not just one choice. So in the process, you need to determine what product makes the most sense for you, find a reliable seller, do some price comparisons, evaluate product delivery standards, and then decide whether you want to have physical delivery to yourself or to an outside independent storage facility. So if you're deciding what product to purchase, Our general orientation is to look for the forms that you can buy closest to gold value that are in widely traded forms. And I'm going to pass around some examples here. I like putting a gold coin in somebody's hand. Their usual reaction is, this weighs more than I thought. The first thing I'm going to pass around is a Canadian gold coin called a Maple Leaf.
You better count them.
The second one is a U.S. gold coin called Buffalo. It has a design quite a lot like the old Indian head or Buffalo nickel. And the third one is a privately manufactured 1-ounce gold bar. That's the color of pure gold. It's 999 purity or 9999 purity. But that's one of the choices you get to make. Do you want to own something that's pure, or do you want something that's alloyed? Pure gold is a soft metal. If you hold that maple leaf, 6 inches above a hard counter and drop it on there, it'll dent. And people don't like to have it dented, so you may want to have alloyed, which is why pure gold coins rarely were made for circulation. I'll pass around 2 here. It's South Africa gold Krugerrand.
What's the denomination value on the coin? Like on one of them had $50.
Most of them do.
Yeah, so what's the purpose of that?
To establish a legal tender purpose.
Just a legal tender?
Right. Doesn't mean that you could spend them for that, although you wouldn't want to. The 2 I passed out there are the South African Krugerrand and the United States American Arts Medallion, which was a bullion issue made from 1980 to 1984 that was a flop for the U.S. Mint. But those have a copper alloy, so you can see they're kind of orangish compared to what the color of pure gold is. And then the last 3 I pass around is an Austria 100 Corona, U.S. 1-ounce gold American Eagle, and a British Sovereign. The Sovereign doesn't have any silver content, but the 100 Corona and the American Eagle have a touch of silver in them, so they look yellowish rather than orangish, but not the yellowish of pure gold. So among the choices you need to make, some people say, well, I want to buy something made in the United States. And other people don't care, or they say, I want to avoid owning something made in the United States. Most people nowadays seem to want to acquire pieces that have an exact metal content, 1 ounce, ½ ounce, or whatever. But you have older coins that did circulate. The Austria 100 Corona was one, and the British Sovereign was one, that were not made to be even weights. The Austria 100 Corona that was made up into World War I contains 0.9802 of an ounce of gold. The British Sovereign is a little less than a ¼ ounce of gold. So some people say, well, I want to be able to look if there's 10 coins there, there's 10 ounces of gold. And others say, I don't care. Do you want pure or do you want alloyed? There's no absolute right answer for any of these. If you get in a situation where the price of gold goes so high that everybody in the public is liquidating them and it's being sent to a refiner to melt back down into pure gold again, in 1980 when the price of gold got up to about $800 an ounce, the pure gold issues are worth about $1 an ounce more than the alloyed ones. You have a question?
Are certain of these more liquid than others?
These are examples of things that have fairly high liquidity. The American Arts medallions, because they were not made in that large of quantities compared to the others, are, I'd say, less liquid than the other pieces. The United States government made a lot of mistakes in designing the product and in marketing the product, which led to its failure. To give you some examples, nowhere on that piece does it say United States of America. So where was it issued? It does not say this is made out of gold. In 1982, this is the Grant Wood there is a 1980 issue. In 1982, the Mint changed it, so they did say United States of America, and it did say 1 ounce gold. Also, the edge of the piece is just smooth, and in years past, there was a practice often done by governments where you take a little sliver of metal off the edge and it wouldn't be detected. So to protect against that, gold coins and a lot of silver coins had reading or lettering or some artwork around the edge so that if somebody shaved off metal, you could tell. But the U.S. Mint didn't do that until 1982. And the one thing that made it a fatal product is it was not made legal tender. It was not given a face value. So if, for instance, you were to take an American Eagle and the Grant Wood American Arts medallion across the border into Canada, the American Eagle isn't subject to any duties or customs, but the Grant Wood would be subject to it.
Dan, what
Yes.
determines the liquidity of any of these coins?
The volume of trading and how many places you can trade them. These are all issues that have high liquidity. You can get, actually most coin dealers, if they don't know it just by dealing in it, have references where they can tell that it's the real product and be able to deal with it. Most Americans in the United States, because they haven't had circulating gold coins since 1933, don't have that much familiarity with them to look at it and say, I know this is real or it's not. But liquidity is another factor to consider. And last, divisibility. If you have a 1 ounce coin and a 1/10 ounce coin, and you get in a situation where maybe you need to spend it, it's easier to spend a 1/10 ounce gold coin that is a smaller piece than the larger one. Bullion products in current production tend to cost a higher premium than what you might say are discontinued past issues. Examples of past issues of the gold are the Austria 100 Corona, Mexican 50 peso, and the American Arts medallions. In the case of silver coins, the United States dimes, quarters, half dollars were made of 90% silver up until 1964. And then the half dollars only were made of a lesser purity of silver, 40% from 65 to 69. So those are out of production. They don't weigh an exact amount. It takes approximately $1.40 face value of these coins to have 1 ounce of silver content. So they tend to trade at a low premium. We recommend buying merchandise that pretty much any dealer would be willing to trade in. There are, particularly for rare coins, services that will examine a piece and judge whether or not it's authentic and also its state of preservation. They charge fees for that expertizing service. But for bullion coins, that tends not to add any value to it, and it's not worth doing that. So that's some of the factors to consider in what you might want to purchase, then you say, how do you find a reliable dealer? You can check for recommendations, you can check online reviews, although there was a company in the state of Washington that had an A+ rating on the Better Business Bureau, but if you check their complaints, they had over 120 complaints listed for failure to deliver product or extremely long delays in delivering product compared to when they said they would do it, or if people sold stuff to them, they weren't getting paid for it, or it took several months to get the check. So if you just look at the Better Business Bureau and it says A+, that's not the whole story necessarily. So it's good to check reviews, check with people whose opinion you may trust if they know any reliable coin dealers. If you want to check in your local area, I'd say go see everybody that's listed as a coin dealer, because you'll learn little bits at each different place, and you get a different sense of, do I like this place or not? But at least it'll add to your education, even if you don't conduct any transactions with them. You can look at different directories, such as the American Numismatic Association, which is it's a national coin dealer association. They have a list of dealers. The Professional Numismatist Guild has a list of about 300 coin dealers that are sort of the elite, not all of the elite, but upper tier dealers. And if I want to brag about my company, there's only 5 companies that have 4 or more members in the P&G, and my company is one of them. That's worldwide. Or another place is Industry Council for Tangible Assets. If you see a dealer listed in all 3 of them, that's a pretty good sign. If you see him not listed in any of them, they may not be as competitive or give you as good a service. If they're listed in 1 or 2, maybe not. Company longevity is good. I'd say if you find a dealer who's been in the business at least 20 years, they've been through some market ups and downs, and they tend to be more financially stable, whereas newer companies, you don't have as much knowledge, although you can have deeply experienced dealers go out and form a new company, so the age of the company doesn't always tell you everything. Dealers who have merchandise immediately available for delivery is a good sign of financial strength. There have been some dealers that say, well, I can't order the product until after I get your payment. That's probably not a good sign. If you buy by mail order and the company ships promptly, that's a good sign that they have the merchandise or they have reliable sources. If you ask questions and they can answer knowledgeably, that's a good sign. And if it's a dealer such as my company that insists that the customers have to take delivery of the merchandise, that's good. There's been a handful of companies over the years who have said, buy it from me, I'll give you a really good price, and I'll provide free storage for you. Anytime you want it, you can come get it. And unfortunately, too many of them have gone out of business, and there wasn't anything there. So if you make your purchases, you have to get delivery, or you have to make your own arrangements for storage. A couple of these companies says, oh, we'll make the arrangements for storage somewhere else on your behalf, and they didn't. There are some primary distributors for the different mitts that make product. Most of them do wholesale business only. A couple of them will sell to the public, so it is you can certainly check out and compare prices with them. But price isn't the only thing to consider. You need to look at the value of good service, and I've got some points here. Does the dealer have your interest at heart, or do they seem to be acting to try to sell you products that are in their interest? We have a number of customers that have told us saying, I contacted a company, I wanted to buy some Bullion Price Gold coins, and they wouldn't sell them to me. They only wanted to sell them more expensive rare coins, which have higher profit margins for dealers. And that wouldn't be a good sign. Can the dealer provide the information to you? I write Liberty's Outlook newsletter for the company 3 of the last 4 years. It has won an award for the best dealer published newsletter from the Numismatic Literary Guild. The year I didn't win, they abolished the category, so I couldn't win that. But I've seen a number of coin dealer newsletters that are basically just sales puffery. They don't really provide hard information. In our newsletter, we have an actual list of selling prices as of 2 o'clock in the afternoon on the day of the newsletter, so that you compare the price of this against this, against this, against this. And I try to include information that the reader finds of value and that they will tend not to come across in your everyday media sources. So that's what I mean there. Companies that buy and sell both are better than there are some companies that will only sell, which they tend to hide the fact that their markups tend to be pretty high. Do they have a wide product selection or just a few items? If a company has a lot of products available, that's a sign of more financial stability. Will they accept orders of the size that you contemplate? There are some companies that have fairly high minimum orders, so if you want to spend $1,000, they won't deal with you. Are they friendly and knowledgeable, or do they have to keep putting you on hold so they can check with their supervisor or their person next to them? Is what they say sensible, or is it complicated? And then do they let you make up your own mind, or do they give you basically high pressure sales tactics? And then do they perform as they say they do? Now this gets into the fun part of comparing price quotes, because not everybody quotes the same price the same way, as I'll get you an example on the next slide. There's a lot of sources where you can check to see what a current spot price is. If you check 5 different sources at the same time, you will probably find that none of them are exactly the same, but should be pretty close to them. The BullionDesk.com website is threatening to discontinue providing spot prices, but at least they are the last I checked. The best thing to do is comparative price comparisons, but you will find that the same dealer is not necessarily the cheapest seller of every product in every quantity that you may contemplate purchasing. So you need to focus in on what you're looking for and in the quantities you're looking for. There are some companies that appear to quote very low selling prices on the products they're offering, and then once you say I'd like to buy, and they say, oh, we have a commission to add on top of that, 2% or whatever. So when you're asking for a price quote, you need to say, how much do I have to write the check for? Some of them have unreasonable postage charges, although that's getting a lot more competitive lately. So the important thing is, how much do I have to pay? There are some companies, as I said, that will not, like the Shanghai Gold Exchange, will not conduct a transaction or even lock in a price until they have to have good funds from you if you're buying from them, or they have your merchandise in hand if you're selling to them. We had back in the 1980s, a gentleman had a sizable quantity of United States $20 gold pieces. And he called us up and we quoted him a price. And we said, we'll send you a bank wire 2 days after receipt of the merchandise. But, he pinned down the price when he called to confirm it. He called another competitor, and that competitor said they would pay $6 a coin more. This is about a $250,000 transaction. So he shipped the coins to the other company. And when he didn't get any payment, he called them up and he said, well, the deal is we fix the price at the time we sell the coins as they dribble out, rather than they were going to pay the price that they quoted on the phone. And he called our company 6 weeks later and said, I still haven't gotten a check from them. Is there anything you can tell me to help me get my money? And unfortunately, there wasn't. So you need to make sure that you're pinning down a price, because you don't want the price to depend on something that happens in the future, which could be the same or more or less. It's better to know. So yesterday afternoon at 5:30, I checked our companies and two national competitors. Competitor number one happens to be a primary distributor for a lot of mints around the world. It's a company that sells over $1 billion a year. So, I asked about buying $1,000 face value of 90% silver coins in circulated condition, which would contain about 715 ounces of silver. And how much do you have to write the check for? And you can see there the prices. Our company came out the lowest. And if you take the price divided by the 715 ounces, you come out with the price per ounce that you're paying to buy silver. And if you take the price per ounce for the merchandise and divide it by the quoted spot price, you come out with a premium above the silver value. So it can happen that a company could quote a higher spot price, but their selling price of the merchandise might be lower. Our company tends to be exceptionally competitive selling 90% silver coins because our cost is lower than most dealers. Like competitor number one obtains almost all of their supply of this product from other dealers, so they're paying wholesale prices. Our company buys large quantities of it from the general public at a little lower price than we would pay a dealer, so we turn around and are a more competitive seller. But one bit of warning is somebody that might be a competitive seller on day one isn't necessarily going to be that 3 months later. There's a good chance of that, but you can't always count on that. All right, you also need to evaluate delivery standards. The most reliable companies have fast shipping standards. In order to be able to ship that fast, you either have to have the merchandise on hand or you have it sitting in depositories around the country. My company has varying amounts of stuff sitting in depositories around the country, so that if a California customer purchases something, we might be able to get it shipped out of Brinks in Las Vegas and it gets to them a couple days faster. But you can't do that if you don't have the most good companies ship within 3 business days. Our standard is the same day or the next business day. In receipt of good funds, and good funds are bank wires, cash, cashier's checks, money orders. If you pay by a personal check or a certified check, normally dealers will not ship immediately because there's a risk that the payment will come back not good. The banks that return the checks normally bounce it in 1 to 3 days, but it can take up to 2 weeks for the vendor to find out that it's being returned. So we have customers that call us up and says, yeah, I checked my bank, the check's cleared, and we just explain, well, your bank hasn't contacted us to tell us the check was cleared. So you will have normally a week to 2 weeks delay on delivery and payment by personal checks. You can have some markets where there's so much demand for product that deliveries do get backed up. The last time it was really severe was in late 2008. For instance, when we were selling 1-ounce silver bars, you got your place in line by when you paid for it. So our customers got their place in line by when they paid us. We got our place in line by when we paid the wholesaler. The wholesaler got his place in line by when he paid the fabricator. And the wait time got as long as 4 months. But if you're calling several dealers and say 4 dealers say, yeah, we'll ship within a week when you get your payment, and one company says, we'll ship within a month, you probably don't want to deal with a company that says a month. But if every dealer says it's probably going to take a month, then, it's real.
In fact, you did $1,000 face value in your example.
Yes.
At what point do you tell them what designation you want? Because I'm assuming that $1,000 face value can be all different types of size.
It would be almost always dimes or quarters. We do have some customers that request a particular denomination, and almost always we can accommodate that.
Okay.
I like dimes because each one has about 1/14 of an ounce of silver. It's really divisible. You can buy a loaf of bread for a dime. But quarters are easier to count. A company back in the late 1980s tried to market the 90% silver half dollars as somehow being rare coins because people weren't seeing them in their change. And they sold enough of them that it generally, if you want to buy half dollars of 90% silver today, you have to pay a little bit extra. But my thinking is that when you want to sell them, you're not going to get paid any extra. So I wouldn't recommend buying half dollars unless you don't have to pay any extra over what quarters or dimes cost.
Okay, and a $1/2 would be how many ounces of silver? 'Cause
And
that's
a
face
dollar,
value.
yeah, a dollar of face value of any of those is about 0.715 ounces of silver. If you have products shipped by Federal Express or UPS, technically it's illegal unless it's products that the United States Mint ships by those carriers. That would be like proof sets are an example of that. And even if somebody says, I'd like to pay extra to get insurance coverage on the package because it's valuable, since it's illegal to have shipped that, they won't pay off on the insurance coverage.
But on
They-
US Mint and stuff, they would.
Yes. The private companies can get insurance coverage, and my company, for instance, has insurance on our Federal Express shipments, but we don't tell the Federal Express people that we're shipping coins or ingots. And they're smart enough, they don't ask. So officially, they don't know, because if they knew, they would be required to not do business with us. Yes.
So you're saying when a company like the American Precious Metal Exchange ships precious metals to you through
Yes.
FedEx, that's illegal?
It would technically be illegal, but, it
But they
it happens a lot.
There, the big sign up on saying that and pick it up.
Yeah.
What about through US mail?
Registered mail is extremely safe. It's not so inexpensive, but we've shipped tens of thousands of packages by registered mail over the years. I don't know, maybe over 100,000 even. And we've only had 20 get lost in 48 years. We had one shipped to a customer in Orange County, California, that did not get there. And when it was verified that it wasn't delivered, we repeated the shipment, and that one also did not get there. It disappeared on the loading dock at the Santa Ana post office both times. So the customer then said, let's ship it to a friend of mine who's outside of that postal area. And that one got through okay. That's, yeah, it's a hassle when that happens, but it rarely happens. I think of registered mail packages coming to us, we've only had one that totally didn't arrive.
And you can buy insurance too.
Yes, registered mail, you can get insurance up to $25,000. Or in our company, we have insurance coverage up to the $75,000 on top of the $25,000. There have been a few packages coming to us that were not well wrapped and that did get crushed in shipment, and a few things fell out, whether it was total accident or an accident and then it got helped. But generally, you can ship by post office. You can use insured mail for smaller value ones, but it seems like about 1% of those packages never get delivered. And when we do ship packages, and smart shippers know, you don't put something on the label saying things like gold, coins, precious metals, silver. So I just say Liberty Co. All right, so
Cannabis.
now there's no perfect answer to the question is, where should I store what I have? One is you have physical custody in your possession, in your home, or your some instances where you work. I store mine at work because the company has insurance coverage on it, and it's pretty safe. But if you have physical custody of it, you know you have it. You don't have to pay fees for that kind of storage. And it's a lot more private than if you have an account somewhere or a safe deposit box somewhere with your name on it, and somebody could find out what's there. But the disadvantages of it is it could be hard to conceal, or some people have concealed it so well they couldn't remember where it was. I had a physician in Kalamazoo area who hid it in up the chimney of a fireplace they never used, and then they used it and scorched a bunch of gold and platinum they had, which made it not really tradable for retail and wholesale purposes, but they only lost about 1% because the value of the metal is what counted. So there's that. And if you do try to insurance for having your physical custody, insurance is pretty expensive. Unfortunately, it's also subject to theft, and that includes by family or friends. You can use safe deposit boxes.
Because the family knows where it is.
Yeah. Safe deposit boxes have a higher degree of security, and the box is in your name. And it can be stored at a bank or credit union close to you. And the fees aren't too high. But disadvantages, well, it still has, if you want to insure it for storage in a safe deposit box, you still have to pay insurance fees. You have a loss of privacy because the financial institution knows you're a customer, it has a safe deposit box. And it may be unavailable in the event of power failures, bank holidays, government decrees, death. In Lansing in 2013, just before Christmas, there was a horrible ice storm, and I think you got affected down here. And there were some banks and credit unions that weren't open for a few days. There were not a lot of people know that, but when the Twin Towers fell in New York City on September 11th, about 5 stories underground, there was an awful lot of gold and silver stored. It took as long as 3 months to recover it, and they did recover well over 90% of what was stored there. But while they couldn't get to it, you couldn't sell it if you wanted to sell it. Then you can have bank vault storage. That has an even higher degree of security, and the fees tend to be pretty modest and includes insurance coverage. But if you use the lower cost unallocated storage, that means it's an asset of the banker and it's not in your name specifically. And it may be stored a long way away. Most of the precious metal storage in the United States in banks are in Delaware. So if you said, oh, I'd like to get a handful of my silver coins today to sell for whatever purpose, do you want to take the time and pay the fees to have it shipped to you and wait for it, or do you want to drive to Delaware to get it? You can also have independent storage.
So
Yes?
there are no banks around here that if you call them and say, do you do vault storage of stuff? Nobody would say, oh yeah, come bring it over,
No, they
such-
just
such
say,
national bank.
it's a safe deposit box. I don't know of any precious metal storage facilities. Nearest one I know of might be in Toronto.
Yeah.
Uh,
Seems like a good option for
A
anybody.
safe deposit box is not allocated storage, but you would.
No, that's in your personal name, so there's no confusion over who has title to it. Storage facilities that are not affiliated with a bank are safer still. And there's a handful of these companies. But again, you would want to avoid unallocated storage, which means you might have $50,000 face value, 90% silver coins, but not one of those coins has your name on it. To arrange to have it stored in your name, you need to set up allocated or registered storage, where it is physically segregated with your name on it, but that costs about twice as much. But you still have the problems that it may be stored a long way away. Since there's no perfect solution, one thing I suggest to people is you may want to do a combination where maybe you'd have some precious metals in your physical custody and some in a safe deposit box, and if you have a whole lot, then you might want to have some in vault storage. That way, hopefully, if you needed something quick, whatever you have at hand would be enough for that purpose, but you're not stuck holding half a mountain full. We have had customers make fairly large purchases. The United States is making a 1 ounce silver dollar since 1986 called the Silver Eagle dollars. The mint sells them in sealed boxes of 500 coins. But I had a customer out west who made a purchase of 200,000 of them. he fortunately was part owner of an armored car depot, which had insurance coverage. The mint packages, I think it's 50 boxes, so 25,000 coins on a pallet. So we had 8 pallets shipped to him, direct to his armored car depot. He also lived in a small town suburb of that major city, and he said, if somebody pulls up to deliver that amount of stuff to me, everybody in the city's going to know that I got something. So he also kept it anonymous by having it delivered to work. Okay, now this is kind of the fun part. Warning signs of dealers you may want to avoid. Those who make cold calls, there are companies that try to get list of potential victims. Unfortunately, it often is made up of a high percentage of senior citizens. And they just try to call and generally try to sell merchandise with very high profit margins rather than something that's a good product to consider at the prices they're suggesting. There's companies that use teaser ads or bait and switch tactics. I have seen ads in the local newspaper offering a bullion gold coin at a very good price. And if you call to try to purchase it, I've had customers tell me, he said, I'm calling in response to your ad and I want to buy that coin. And he said, no matter how long I argued with them, they would never sell them to me. They would only want me to buy other products that I didn't want, but were higher profit margin products. I also don't recommend looking for leveraged accounts. That's where a company might say, I want you to buy $50,000 of silver, you send me $10,000 down, and we will loan you $40,000 on which you have to pay interest. But say if the value of the silver goes down 10%, that means your silver is worth $45,000, and if you need to maintain 20% coverage, you might get a margin call, because if it's 45,000 value and they loaned you 40,000, you only have 5,000 equity in what's left, and you need 9,000. So they could say, send us the 4,000 today, or we're closing out your position, which means you've lost control of it. If things work in your favor, you can magnify your profits, but I don't recommend using leverage for owning physical precious metals. In my mind, you own your core position of physical precious metals until you die, and then your heirs get their hands on it. You could consider buying some more that you think of as a position you'd think of buying and selling, but you don't want to be in a position to force to liquidate your core holdings. There are companies that, not so much nowadays, but 20 years ago, were saying you want to buy expensive coins because the government could confiscate just bullion price coins. And that, if somebody thought for a minute saying, well, if it's so risky buying gold bullion, why don't I just buy silver bullion? But that's not what the sales spiel is. But as soon as somebody talks about gold confiscation, which mischaracterized what actually happened in 1933, Americans were required to turn in their gold coins and gold certificates of more than $100 face value, but they were 100% compensated for the value of what they turned in. So what you received, you could immediately spend for the same value of what you gave up. Now, a year later, the government revalued the price of gold, but at the time, that event happened, it wasn't a confiscation, it was a redemption. So, if a company brings up the term gold confiscation, that's not a good sign of their ethic. If you're trying to buy bling price coins and the company's trying to steer you to buy collector coins, that's not a good sign. If they try to steer you to establish a precious metals IRA, that's a really bad sign. And as I said before, if they only want to sell but they won't buy from you, if somebody wants to avoid using the postal system, because if you commit some kind of fraud through using the mails, that makes it a federal crime. And there have been some companies that said, well, you got to send your payment to me by Federal Express and I'll send you the goods by Federal Express. They're pretending it's for good service, but they're trying to keep it out of the postal system. If somebody offers to break the law, actually the Federal Trade Commission regulations now for delivering product is you have to deliver it within 28 days of when you got full payment for the products. And generally, if you cannot do that, the vendor is supposed to contact the buyer and saying, do you wish to cancel a transaction and get a full refund? So if they're not shipping fast and they don't jump through the right hoops, that's not a good sign. And then, unfortunately, those that advertise to the general public through televisions or newspapers or tend to work on wider profit margins. So not necessarily a good sign.
Patrick,
Yes.
I think you're one slide ahead right now. You want to back up one slide.
All right. Thank you. Now I'll go into a little more detail about why I suggest not looking at using precious metals in individual retirement account. There have been plans floated now going on 20 years to one way or another confiscate private retirement accounts. Since there's well over $10 trillion in these accounts, I think it would be fairly easy for the government to say, we need to protect people's retirement accounts, and the way we're going to do that is we'll take them and then guarantee that you'll get your money or replace them with government bonds. The first plan that came out during the Clinton administration was to just tax the assets, seize 15% of them, and then tax them 15% when you put the money into the account. And in return, you wouldn't have to pay income taxes when the money came back out. That didn't go anywhere. 11 years ago was a formal plan to replace them with U.S. Treasury bonds. And that's evolving, and there's a Secure Act in Congress right now. It's passed the House, it's in the Senate, that is going more along the lines that when a retiree wants to start withdrawing their funds from their retirement account, it'll be converted into an annuity so that when that person dies, there won't be any assets left for the heirs. Now, it's not just speaking theoretically. I don't know if I have the list there. Countries of Spain, Argentina, Hungary, Poland, and there's about 4 more that have actually seized assets out of private retirement accounts. So it's not speculative, it's something that has actually happened.
Patrick, you used the term Secure Act.
Yes.
What does that mean?
Well, SECURE is the acronym for the whole name. It makes a number of changes to individual retirement accounts.
It's currently currently being like debated
Yeah.
as we speak.
Yeah, it's in the US Senate right now.
Yeah.
That's called secure.
That's just a, they always have like these fancy little, it's like, it has like 5 or 6
Yeah,
words that
yeah.
mean that each letter is SEC or.
Because they don't wanna call it, will attach your money.
Secure
for who?
You should have stopped your 401k 10 years ago. Wow.
No, the reason that a number of dealers push precious metals IRAs is that is often where somebody may have a good part of their assets available. So if you want them to make a $50,000 purchase instead of a $1,000 purchase, well, let's have them use their IRA funds to do that. There are a number of objections to considering that for an IRA. One is precious metals are a tax-deferred asset where you don't owe taxes until and if you sell it. So you don't want to put tax-deferred assets in a tax-deferred account. A tax-deferred account is for assets that generate interest that you'd be paying taxes on now, like dividends and interest. There's also fees.
I have a question about that.
Yes?
So I walk into Liberty Coin Service with a roll of 25 American Eagle silver dollars. What does that transaction look like when I say, I want to sell these to you?
Okay. We check what the current silver price is. I think, they come in rolls of 20 coins, but I think if you have 20 or more, we're currently paying, I believe it's either 75 cents or a dollar coin above the silver spot price. So we look at the silver spot price and math out the price. We ask you for your identification so we can prove you're at least 18 and document it, and then you sign a form saying you are selling it either because you own it or you are authorized by whatever arrangements, like for estates, or if you're selling it for your brother or something, that you're authorized to sell it to us and that we paid you that much for it. So you sign a receipt that we paid you and we pay you. Normally we pay cash, but if people want checks, we can do that too.
What about reporting to the IRS?
That's coming up in a moment here.
That's what you're
Very next slide.
What I'm asking, what does that look like?
There's a lot of misconfusion in this area. There's 3 different kinds of regulations affecting coin dealers in particular. One is receiving cash in a trade or business. And this applies to all businesses. If you receive $10,000 or more in what's defined as cash, you need to file a report with the IRS of having done so. And that includes cash. It includes cashes, checks, and money orders in the amounts of $10,000 or less. So if somebody comes in with $2,000, $6,000 cashier's check, that's receiving more than $10,000 in cash. But it doesn't include personal checks, doesn't include bank wires. Well, the bank wire may be more than that, but if you send a bank wire for more than $10,000, the bank fills their report out on that. So that's one of the sets of regulations. Then if,
So, okay, let me ask, so let's say I brought a $300 worth roll of silver dollars in every week. Walked in once a week and traded one of those in. Okay, over the course of a year, I don't know, is that more than, more than $10,000?
Okay.
So you have to keep track of that and say, oh, this guy comes in every week gets $300
no,
worth.
we just get, a receipt from you that we paid you for some merchandise. You as a seller may have tax consequences to put on your tax return, but it's your responsibility to do that. However, there are a handful of kinds of products that coin dealers would need to prepare a 1099 form to do that. One of the other handouts I have here is called IRS and government reporting requirements for coin dealers. It's a very limited list of products, and it tends to be in very large transactions. And it doesn't matter if you're, if you're a corporation selling it, it doesn't apply to you, but if you have an unincorporated coin dealer, for instance, they would be potentially subject to that. But we do tens of thousands of transactions a year, and our company maybe sends in 50 such reports a year. So it doesn't happen very often. And then there's also, under the USA Patriot Act, anti-money laundering compliance. And our company, for instance, if a retail or wholesale customer wants to conduct a transaction, whether buying or selling $5,000 or more, we're supposed to ask for identification. But we don't file any government reports on that, but we have to have this file of it available should somebody from the government come in and saying we want to look through those transactions. But there's more details in this article of exactly what coins and ingots. We may have to file a 1099 form, so you can see the details there. Okay, now we're at the end here. Never expect to buy at the absolute bottom of the market or sell at the very top. I became a customer of Liberty Coin Service in 1975, and I got on the other side of the counter in 1981. And every time I went in to buy some more, I always want what I already owned to be worth more, but the stuff I bought that day to cost less. And it never worked out. It did happen in 1976. I bought a number of Austria 100 Coronas and other coins, and I hit almost exactly the lowest price of gold from, well, actually I think ever since it's never been that low. But that was just an accident. It's when I got some money from selling a car, and so I went in to spend it. It wasn't because I said it's the right time or this is the perfect day. It was just an accident. So the important part to think is that there are some factors to worry about, and I'll go in a little more detail in just a minute, that you could have much higher precious metals prices at some point that may not be too far in the future. But if you acquire some gold now, and it doesn't matter if the gold price is 1,450 or 1,500 or 1,600, if 3 years from now, if the price of gold is $5,000 an ounce, the important thing is that you have some gold or equivalent in silver. The reason that I talk about it a little bit in the newsletters here, that there could be some significant disruptions is in the middle of September, the Federal Reserve Bank started injecting hundreds of billions of dollars into the overnight bank loan market, and also in the 14-day bank loan market. They announced in early October that they're willing to commit up to a total of $600 billion to provide bank liquidity, because if the banks start having to say we can't conduct operations now, that would severely disrupt the economy. I hear the total now they're talking about is going up to $690 billion, and it could be higher. In theory, the Federal Reserve is supposed to contact Congress to give them the details of doing this under the Dodd-Frank Act, but they're not doing that, and the people in Congress are not asking them to say. One of the things they'd say is what banks are getting these funds, So nobody who knows, because of handling these transactions, is speaking. I don't have any hard evidence, but my suspicions are that JP Morgan Chase and Deutsche Bank, the largest bank in Germany, are probably the two getting most of these funds. But you've got a lot of good economic news now going along, but if this banking situation gets out of hand, that could turn around real quick. There is, the Federal Reserve, before the Great Recession, had a balance sheet of $900 billion. It worked it up to $4.5 trillion, supposedly to help get out of the recession. And the theory was when the recession was over, then they would cut the balance sheet back to normal levels. They didn't start doing that till about 2016. And they only got a little bit under $4 trillion earlier this year and said, oh, we can't trim it anymore. And now the Fed's acknowledging that they're increasing their balance sheet again. So that's an extreme measure to combat an economic downturn, but that's not something you're going to see in the headlines in newspapers. So that could be another reason maybe to want to own some physical precious metals. So are there any more questions here?
Pat, from your history, what do you see people, what percent of their wealth portfolio do you see them putting into gold?
It depends on everybody's circumstances being a little different. And a conservative one, I used to say 5 to 10% of what you might think of as an investment portfolio. With things looking riskier nowadays, I think even 20% could be considered conservative. I don't really recommend anybody look at doing over a third. So somewhere in there. Question here.
It seems from an investment perspective, buying bars is more simpler than coins simply because of the simplicity of its value, right? Because the bar is worth whether the spot price is, or the coin may carry an extra value due to collectability or rareability.
Not necessarily.
No?
Just by what the public has been doing in the United States, for instance, since ownership of gold became legal again in 1975, coins are far more popular with the people that can't afford the 400-ounce gold bars than the ingots.
Isn't it hard to determine that value though? Because I can look at the spot price of a metal to know what my ounce of gold or silver is worth, but it's kind of harder to understand what that coin may be worth because it's got that extra value to it.
No, it trades because it has the metal value to it. So let me just give you some comparisons from 2 o'clock this afternoon. The Ask Gold spot price was $1,494.25. If someone was buying 10 1-ounce gold eagles, that was $1,545. If they were buying 10 1-ounce gold ingots, it was $1,533 each, so $12 an ounce cheaper. If they were buying, say, the Grant Wood, that was selling at $1,522.75 each. So they each have 1-ounce gold content, and that's the basis that they're trading on. You can look at some more expensive examples. The Chinese used to produce a 1-ounce size gold panda coin before they switched to metric weights to make a 30-gram coin. But the 1-ounce panda is selling at $1,597.25. So in a sense, you're paying a little bit to get a extra compared to these other pieces to get the panda design on it. Yes.
What's the standard size silver ingots, I guess, or bars? They
come in different sizes?
Most common sizes of silver ingots you see are 1 ounce, 10 ounce, and 100 ounce, but they come in all sorts of different sizes. A lot of the 1 ounces and some of the like 5 or 10 ounce sizes are also made in round shape rather than rectangular shape. They kind of look like coins. If you have a 100 ounce silver ingot, generally it'd be about the size of my hand. I was called to provide expert testimony in a divorce case where one spouse claimed the other one had purchased a bunch of 100 ounce gold bars and showed them to family members, and our customer had only bought 100 ounce silver bars from our company. The other family members in their depositions described the physical dimensions of it, which was a 100 ounce silver bar size. Gold is a much denser metal, so it doesn't take up as much space. So I took photographs of 100 ounce gold bars laying next to a ruler to show that a 100 ounce gold bar was too small for the dimensions they were mentioning. And they threatened to bring me into court to repeat that, and then the day before they said, they've given up on that issue.
So why would what's the advantage or disadvantage of buying a 1 ounce coin versus a 1 ounce bar? It seems to me coins would be more easily exchangeable, correct?
They tend to be. The buy and sell spread tends to be about the same percentage. Right now, let's say on an American Eagle 1 ounce gold, I think the difference between our buy price for one piece and our sell price for one piece is about 6%. If you get 20 pieces or 100 pieces, it gets a little closer. And it doesn't matter that much which 1 ounce size product it is. So the ones that we're selling now at a lower premium, we're also buying back at a little bit bigger discount to gold value. You do have a trend over time that the higher premium coins tend to lose some of that premium value when enough have been issued onto the market that at any time a certain quantity is being liquidated by the public, and if that becomes enough to meet demand, then there's no need to strike as many more, and the premium tends to fall. So there is a little risk that if you buy, say, an American Eagle 1 ounce gold now, or the Gold Buffalo versus the American Arts Medallion, is 10 years from now, you may have lost about 2% relative to what you would have done if you'd bought the American Arts Medallions. It's not a lot, but it's something. Yes, sir.
As long as owning gold is legal, does the government have any impact on the value of gold? I mean, do they have any way of, because you mentioned something back in the 1930s when you said the government revalued gold, and I'm assuming owning gold must have been illegal at that time?
That's correct. In 1933, the government called in gold. At the time, the government stood ready to buy gold at $20.67 an ounce. About 18 months later, the government said, we're revaluing gold to $35 an ounce and we're going to hold the price. At that time, an act was passed that established the Exchange Stabilization Fund. It's in the U.S. Treasury Department, but it's specifically authorized to manipulate the price of gold by entering the market to buy or sell to influence the price.
And that's in place now?
The law still exists. The declassified documents that have been released all confirm that the U.S. government has been manipulating the price of gold ever since, and that goes up to about 10 or 15 years ago. The U.S. government is the entity that has the greatest advantage of holding the prices of gold and silver down, because the price of gold and silver in some ways is like a report card on the U.S. government, the U.S. dollar, the U.S. economy, and if it's going up, it doesn't look good for the United States. So the government wants to hold those prices down, or has that incentive. The other element is if the U.S. dollar looks weak, then the U.S. government would have to pay a higher interest rate to borrow money. So it wants to hold gold and silver prices down. Yes.
Are there any advantages to other metals like platinum or something like that?
That's a good question, especially since I didn't mention that. There have been consistent shortages of gold and silver most years, going back almost 50 years. Shortages of physical supplies of newly mined product or recycled product versus the demand for it. In the cases of platinum, I haven't checked this for about 10 years now, but it's like every other year there's a surplus and a deficit, but over a decade-long time, the market was about in balance. In the case of palladium, right now that's over $1,700, which I think is insane, because it takes about 2 ounces of palladium to replace the industrial use of 1 ounce of platinum. So 2 ounces of palladium would be about $3,500 now, and an ounce of platinum is about $850. If you're putting one or the other in a catalytic converter, which would you put? But the palladium market is dominated by Russia. During Soviet Union days, so all the independent republics formed out of that, supplied about 2/3 of the world's supply of palladium, but they don't automatically ship to market everything as they mine it. So it's however they dole out the metal, and the infrastructure for mining in that country is in pitiful shape. So it could be that temporarily supplies are restricted either for technological or for political purposes. But if I had some palladium now, I would be selling it rather than wanting to hold on to it. Question there?
Last question. Is there any value difference between a newly minted bar and a recycled bar of silver if I have both? I mean, just the physical value of both?
I think what you mean by there is, say, if somebody bought one and then sold it back to a dealer, so you weren't the first owner of it?
Engelhard on it, and it's really pretty, and then you've got another bar that literally has got the recycle stamp on it that looks like it's fit for it enough.
Well, pretty much every bar is made out of recycled product. It doesn't matter what you think. When the American Gold Eagle program started in 1986, the Mint was directed to first obtain U.S. gold sources, and then eventually they could go on the open market and buy it. And it turned out about 10% of the gold bars the Mint took in to melt down to make these coins had Soviet hallmarks on them. So about 10% of the gold had come from the Soviet Union. And one of the marketing angles is, you're buying American gold. I do have the 3 most recent issues of Liberty's Outlook up here. I particularly recommend looking at the August 7th issue, 3 months ago. This chart here is information you're probably not going to find anywhere else that is one significant indication that the price of gold could go up quickly in a short period of time. Although my experience is that what you think should happen and what actually does happen never seems to get together. You can say the US dollar just doesn't make sense at its current value relative to other currencies, but that's because every other government's trying to drive down their currency values as well. All right.
All right, thank you, Patrick.
So, thank you for coming, and thank you, Patrick, so much. I'm sure Patrick can hang out for a while if anybody has specific questions, and maybe he can even make some deals.
I have been asked if I brought free samples, and I do. Now this is yellow in color, and it's called the golden dollar, but it is not gold. It's a 2019 dollar coin that the U.S. Mint strikes under the American Innovation Series, just started a year ago. This is the first one issued for the state of Delaware. It honors Annie Jump Cannon, who did a lot of work for helping classify the star systems.
Wow.
So the date is on the edge of the coin.
Thank you.